Good evening, everybody. Welcome to the April 22nd edition of the Locking Your Success Trade and Market Update. We actually had an up week in most of the indices this week, which a lot of you are probably surprised about. I know I was when I stepped back and took a look at it because it felt like a down week, but it wasn't. If we take a look at the weekly charts, you can see here in the Russell, the SPX, the Dow, and the Dow, that all three indices had an up week. The only one that did not is the Nasdaq, which is pretty unusual because we've had so much up movement in the past, but it's about time for this thing to settle back. As for where the markets are going, right now I say we settle into more or less a sideways range. Again, the longer term charts are still bullish. You got the Nasdaq here that's just kind of settling into a support level. As far as my opinion on where it's going, it's probably going to support here and go sideways, even if it breaks down into this under 2600, into this support area here. I'd still expect to continue in a somewhat sideways range between 2575 and 2800. As for some of the other guys, if we take a look at the Dow, we got the same type of thing. We're settling into a sideways range. It looks like we're setting up a bit of a head and shoulders pattern going on here. We have a shoulder, a head, another shoulder, which means that we have to watch this low here. Should we start breaking the low with some high volume, it could get kind of ugly for a little while, and push down into this 12 to 50 area. But until that happens, I'm still expecting a sideways range with the Dow. As far as the SPX goes, we have the same type of a setup where we have a complex head and shoulders setting up, and we're going to have to keep an eye on this neckline for a high volume break. In this particular case here, I wouldn't get too excited till we start breaking down under these lows down here. So even if we get a neckline break, unless we break this low with some volume, I wouldn't be overly concerned, and expecting a sideways range there. And same thing with the Russell. I would expect this to range from 775 to 850 over the next month. So that's what we're thinking this week. And of course, as always, things can change depending on what's going on with the marketplace. I did enter our June Bearish Butterfly on Friday, and I decided to start with the 790 short strikes. At the time I did it, the market was a little bit closer to 810. We paid $11.10 for the butterfly, which is a little expensive this far out. But I like the position, and I think everything will go fine. Again, this is the by the guidelines trade. I'd also like to take a look at some of the other ones we got open. Let's look at the May Bearish Butterfly. The May Bearish Butterfly looks kind of like this. We are only in with 1/3. We are up $619. If we continue to stay up over $500 profit until the end of the week, which is near 21 days to expiration, we'll be taking this off at 1/3 profit target. If we happen to go below that, then we'll have to sit in here and play with it for a little while, see if we can get over that number. As of right now, everything looks good. Let's take a look at our May M3 trade. And you may be saying that this looks a little bit different. And you may be saying this looks a little bit different than it did last week. And you'd be right. On Friday, well, let's take a look at our original position before I did anything. If you remember, I entered this earlier in the week, and I went in. When I went in, I was planning on, because we paid so much for the butterflies coming in here, we paid like $11, 30 points behind the market, which is a little expensive, makes our delta a little higher than normal, our gamma a little higher than normal, and our gamma trend a little off. Normally when I get that kind of an entry graph, I will stick a vertical in right away. At the time, I was short-term bearish on the market, so I did not do that. And the market did pull back. And now that I had an more opportune time, I went ahead and bought this vertical. So this trade here would have been up what almost $200, which is good. But I also wanted to double size this month, so I went ahead and double sized it. Bought another call, $69 call. Bought another butterfly. Bought another vertical, and this is what the position currently looks like. It's up $175. Profit target $1,000. Maximum loss $1,000. We'll keep with it. See how it goes. Should be another great month. And last but not least, we had the April M3 trade. Of course, that trade is over because we're past expiration on our options. But let's take a look at it anyway. I will set the date back to Friday. I did end up expiring this trade on Friday. I did have orders in to close out these shorts just to take the risk off the table. So I had an order in to take the 760s and the 770s off at 5 cents if they could do that. That's funny. The 770 actually sold, the 760 didn't, and then I let the rest of it expire. Just in case you are interested in letting Russell options expire, something you should know is sometimes the settlement price for the options has nothing to do with the Thursday night close price. The market closed at 790. What's this close at? 798, I think. Yeah, 798.90 on Thursday, and it opened up at 798.89 on Friday. Which normally you'd say, hey, that's wonderful. I've gotten my money Friday morning because we didn't have any gap, and I'm all set. But one of the things, again, you've got to realize with the Russell is there's 2,000 stocks there. They're determining settlement on the value of the opening of all the stocks in the index, and there are 2,000 of them, and they open at different times throughout the day. So sometimes the settlement price can be significantly different from both our closing and our opening prices on the following day. Sometimes it's not even in the daily range, and that's something that happened this month. So if we take a look at the internet on the CBOE index settlement values, you see that Russell settled at 812.66, and our high for the day was only 810.22. So if you decide to expire these yourself, you should really know what you're doing, and you should realize that that can happen, and make sure you have at least 20-25 points from the closing price on Thursday to your short, and I'd recommend even 30 if you can do it. You get much closer than that, you might want to just close it out to avoid risk, unless of course your expiration line looks good in the direction you're concerned about. Okay, so as for results on this, after commissions, I expired at 933.43, which is just under 10%, which was our profit target. We had 9.3% on our planned capital at $10,000, and that was just another good trade. So we'll put that one to bed, and I'm looking forward to both the May Bearish Butterfly and May M3 trades, making money this month. We'll see how we do. All right, that's it. I will keep you updated when any changes. Thank you and good night.